HYCM was one of the first retail forex brokerages to be regulated in the UK. With over 40 years of experience and representation in the UK, Hong Kong, Cyprus and Dubai, the company has seen a lot of market turmoil. Its Chief Currency Analyst, Giles Coghlan, joins me now. Giles, how have HYCM and your traders responded to this year's crisis?
Well, HYCM already has experience in successfully withstanding some of the biggest market crashes and major volatility over the years. So our clients can be sure that they're trading with one of the most solid and secure brokers in the world. In fact, in terms of traders generally, they do favour volatility. So you do tend to see an uptick in trading activity whenever you get global events like these causing large swings in asset prices. And many brokers have been reporting increased volumes at this time. So generally speaking, it has been quite good for business. However, the record high volatility also provides challenges. It is a very difficult investment environment, and the kind of uncertainty in markets at the moment favour a much shorter term horizon, as longer term investments, particularly earlier in the year, were clouded with considerable uncertainty. For traders, it actually has been a really good time to take advantage of some of our free online webinars and workshops that are located on the HYCM website and hosted by myself every week in order to really enrich and deepen their trading skills and knowledge.
So with your analyst's hat on, what assets do you think would perform well in today's environment?
Well, this is one topic that I've been speaking a lot with HYCM clients about, and this could be a really excellent time for commodities as global growth starts to get going again on global vaccine hopes. Now, this could also be a very, very good time for gold. The Federal Reserve is set to keep interest rates at low levels right through 2023. The US is on the verge at the moment of releasing a large stimulus package, and quantitative easing levels are at record levels. So one of the key areas that we'll be looking at is how quickly the Federal Reserve looks at raising interest rates. And as long as they keep interest rates low, you would expect that to be very good for gold, which has grown and gained in value in all of the last major financial crises that we've had. So gold longs still look good right now, but we need to keep a careful eye on what the Federal Reserve do. Copper also looks very good from a medium to long term. Electric vehicles are growing in popularity, and they're thought to account for about 9.4% of copper demand by 2030. And the current level is 2.4%. So we are, over the medium term, expecting a good boost in copper prices. So you would expect dips in copper to find buyers in the medium term. Another interesting commodity is nickel. According to Morgan Stanley, electric car sales are seen to boost nickel the most of all the commodities used in producing an electric vehicle. So they predict that over the next 5 to 10 years, there's going to be a heavy investment in nickel mining and a greater demand for nickel itself. So over the next 5 to 10 years, the commodity nickel could be a great investment.
And how about currency trades?
Well, I think the currencies that you expect to benefit from this environment are currencies that are pro-cyclical in growth. So typically the Australian dollar and the New Zealand dollar would benefit from a boost in commodity prices. If the US dollar weakens, that would further benefit the Antipodean currencies like the Australian dollar and the New Zealand dollar. And perhaps an Australian dollar Japanese yen long or a New Zealand dollar Japanese yen long could be a great trade over the medium to longer term as we come out of this medical crisis.
Thanks for watching. Learn more at hycm.co.uk. Click now for more conversations with the world's leading forex brokers, and please subscribe for the latest international business insights from worldfinance.com.